Ladies and gentlemen, good day and welcome to the KN Agri Resources Limited H2 FY22 and full year 22 earnings conference call hosted by HEM Securities. As a reminder, all participant lines will be in the listen-only mode, and anyone who wishes to ask a question may enter star and 1 on their touch-tone telephone. To remove yourself from the queue, you may enter star and 2. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Astha Jain from HEM Securities. Thank you, and over to you, ma'am.
Thank you, Myron. Good afternoon, ladies and gentlemen. Thank you for joining KN Agri Resources Limited H2 FY22 and full year FY22 earnings conference call. Joining us on the call today are the senior members of the management team, Mr. Vijay Sri Srimal, Chairman and Managing Director, and Mr. Dhiren Sri Srimal, Full-time Director and CFO. We will commence the call with the opening thoughts from the management team, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. At this point, I would like to add that some of the statements made or discussed on the conference call may be forward-looking in nature. The actual results may vary from these forward-looking statements. I would now like to hand over the call to Mr. Vijay Sri Srimal to commence by sharing his thoughts on the performance and strategic progress made by the company. Thank you, and over to you, sir.
Good evening, investors. I welcome you all to this Concall to discuss our results for the second half of the year 2021-22 and full year 2021-22. First of all, I thank you all for the overwhelming response given by you to our maiden IPO, which got oversubscribed than 150 times. We are happy that your investment in our company has more than doubled, and it will keep growing. Performance 2021-22. The performance in H2 and year as a whole has been very encouraging. Against revenue of 595 crores in H1, the revenue in H2 shot up to 1290 crores. In case of year-to-year comparison, against the sales of 1300 crores in FY 2021, this year our sales have increased to 1885 crores. The opportunity in Agri business were well converted by us into performance. The rising prices of finished goods like soybean meal and oil in particular has also resulted in high turnover of the company last year. Sector outlook for 2021-22. Edible oils. Last year was a very eventful year wherein the global supply of edible oils was affected, and then the Ukraine-Russia war added fuel to it. Ukraine and Russia produces major quantities of sunflower oil, and this was disturbed, which again resulted in increase of the edible oil prices globally. Also, with petroleum prices going up, the biodiesel mandate of the countries increased, which resulted in more diversion of edible oils to biodiesel. The prices of crude soybean oil, which range from $850 to $1,200 last year, went up to $1,200 to $1,900 in the current year. Similarly, palm oil prices, which range from $700 to $1,100 last year, went up to $1,100 to $1,400 in the current year. In the current year, India imported around 13.2 million tons of edible oil as compared to 13.1 million tons last year. Our dependence on imported oil is around 60 to 65%. Soybean. On the crop of soybean, the government estimate for last year production was 13.83 million tons. The industry is saying that the production was not more than 10 million tons. The Soybean Processors Association of India has estimated production at 11.88 million tons. If I want to just go through the rough balance sheet of soybean. The availability of soybean, the carry from last year was 1.83 lakh tons. Production was 118.89 lakh tons. Import from October to September was 3.5 lakh tons. Total availability was 124.22 lakh tons. Against this, the disposal of soybean was retained for sowing is 13 lakh tons, direct consumption 3 lakh tons, exports of seeds 0.5 lakh tons, crushing 88 lakh tons. Total is 104.5 lakh tons. We still have a carry of 19.72 lakh tons. We'll get more seeds to process after the onset of monsoon. During the last year, the arrivals of soybean was little less as the farmers and the traders and stockists were hoarding seeds in anticipation of price rise, but we expect the arrivals will rise in the coming months. Now I move on to the sector outlook for 2021-22. First, I would like to speak on the monsoon. As per the predictions of IMD and SkyMet, it is expected that India will again receive good monsoons this year. Madhya Pradesh, Maharashtra and Rajasthan are major soya producing states in India, contributing more than 75% of the production. Though the area under soybean cultivation will not rise much, but a good monsoon will result in good yields, and if that happens, then we can expect a good crop of about 12 million tons in the coming season. Review of the proposals and projects. First, I'll take up ethanol. In line with our philosophy of increasing our presence in agri business, we have invested rupees 19 crores from internal accruals and bought 26% stake in the holding company of an ethanol manufacturing entity. Currently, the plant is of 100,000 liters per day capacity, but soon it will be substantially enhanced. Sales have already commenced to PSU oil marketing companies. India has achieved little less than 10% blending of ethanol with petrol, as against the target of 20% blending by 2025 set by the Government of India. This huge gap provides substantial opportunity in this segment. The second I would like to take up is the port-based edible oil refinery. We are working towards setting up of 600 tons per day port-based edible oil refinery in joint venture with a multinational entity. This refinery will be able to process soybean oil, palm oil, and sunflower oil. 300 tons per day line will be dedicated to soybean oil and 300 tons per day for palm sunflower oil. The project is estimated around 125 crores. The project will be implemented in 12 to 15 months, and we can see it earning from the year 2023-24. Now I would like to speak on other projects. We have started mustard processing facility of 200 MT per day at our Itarsi plant. The value-added soya products like nuggets, grits, and flour production has also started in Khandwa. In the current year, we will open up an oil storage and packing facility in Raipur to have the presence of our packed oils in Chhattisgarh and some parts of Orissa. All this will have a positive impact on the earnings of this year. Thank you.
This is the operator, sir. Do we begin the question and answer session?
Yeah.
Thank you very much. We will now begin the question and answer session.
No. I would request that our CFO will also give some introductory remarks, then we can start the question and answer session.
Sure, sir.
Thank you, Mr. Vijay. Good evening, ladies and gentlemen. It is an esteemed pleasure to present the financial highlights which depicts the current performance and growth trajectory for achievements. For year 2021-22, versus 1301 crores for FY21, a growth of 45%. The company reported EBITDA of 70 crores for FY22 versus rupees 44 crores FY21, a growth of 59%. On year-to-year basis, PAT surged by 83% to 47 crores for financial year 22 versus 26 crores for financial year 21. For half-yearly financial year 22, the total revenue of company stood at 1290 crores versus 595 crores for half-yearly 21, a growth of 117%. The company reported EBITDA of 45 crores for H2 FY22 versus 25 crores H1 FY22, a growth of 80%. PAT surged by 84% to 31 crores for H2 FY22 versus 17 crores for H1 FY22. Once again, I would like to thank you all. Over to the moderator.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Prashant S., an individual investor. Please go ahead.
Thank you for the opportunity. First of all, congratulations for great set of numbers. My question to the management is, as company has reported earlier that company was planning to set up a ethanol processing capacity. I want to know capex plan related to that and when we can see revenue generated from this. In which year we can expect revenue.
Okay. I've already mentioned that, we have invested around 19 crores to take up a stake of 26% in this company. And the current production capacity is 100,000 liters per day. And we are increasing it to 160,000 liters per day with a capex of around 30 crores in the coming year.
Okay. My next question is, like after the ban of palm oil by Indonesia, any impact that we are seeing in our top line?
No, the ban was by Indonesia government was of a temporary nature, and now the government of Indonesia has opened the ban, so it is now back to normal. So there is no impact of the ban on the market as of now.
Okay. My next question is, what is our current market share in edible oil market, and what is our target for next 2 to 3 years?
As of now, if you see, we have a packed market in Madhya Pradesh where we are situated is about 35,000 metric tons per month. So in that we have, as of now, we have a share of about 6%, which we tend to increase to almost about 15-16% in 2 years' time.
Okay. Okay, that's it.
Any further questions, Mr. Prasad?
No, that's it.
Thank you. Participants who wish to ask a question may press star and one on their touchtone telephone. Participants who wish to ask a question may press star and one on their touchtone telephone. We have the next question from the line of Shubham Jain, an individual investor. Please go ahead.
Hello, sir. Good evening. First of all, thank you so much for giving me the opportunity, and congratulations for good set of numbers. Sir, I just want to know that what is our revenue guidance for the FY22 and 23?
Okay. See, as of now, everything the performance in this quarter is as per expectation, and a lot depends on the monsoon, and the current prediction of monsoon is good. So we expect that we should achieve reasonable growth in the earnings for the coming year.
Sir, so can we expect double-digit growth or single-digit growth? Can you mention some particular figure for the same?
See, I would give, numbers so because it depends on many factors. But if you see our performance, I think we should be able to give you a decent growth in the current year.
And sir, what about sustainable EBITDA margin? Can you just give me some guideline or some figure for our EBITDA margin in FY22 and 23?
Yeah, I mean, again, EBITDA margins will also depend on the variety of factors, as like international market, other things. But have in the past maintained it, and
this is the operator here, sir. Would you kindly repeat the previous sentence as it was not very clear on the line?
Sir, I just want to know what is our sustainable EBITDA margin for FY23 long term. I just want to have some figure or particular. Right now we are working on 3%. So right now we are working on 3%, sir. So is that same for the next FY23?
As of now, our EBITDA for 21-22 year end is 3.7. So looking to the situation, we have a decent monsoon, government policies are good, so we should be able to do the growth should be in line with what we have done in past years. So it should be a decent growth in coming year.
Oh, okay. Thank you so much, sir.
Thank you.
Thank you. We have the next question from the line of Ronald Dalal from Museum Capital. Please go ahead.
Yeah, hi. Congratulations on your recent IPO and the results.
Thank you.
So I had a few questions. So firstly, I wanted to ask you that what is your share of maybe like manufacturing/processing versus purely just trading?
So majorly ours is we do major processing, but then depends upon the year to year. If you have a lot of prices and we see this, like last year there was a lot of prices of oil, so we had to import oil because there to process entire thing and give it to be imported, and then we packed and we sold it to our consumers. So that keeps changing upon the opportunity. So depending on the opportunity and profitability is decided. But our main focus is on manufacturing. Where we manufacture, process, trade, and then pack it and give it.
Right. So what would be like maybe a breakup if you had that? Something like a normalized breakup. I understand last year was unusual year, but usually what would you say is a breakup?
Normally, breakup should be like the manufacturing side, we should see around 70 to 75% and balance should be trading.
Right. Okay. And that is likely to remain the way it is, like maybe going ahead also it should be in that range, 70,
Should
75?
be same line, but it little depends on the market conditions also, government policies also, so maybe a 5% variation here, there, whatever, But again, upon the opportunity, what is the best for the company, we decide and we do that.
Right. Okay. So next question is that, you would be dealing with many variety of oils. So
Yeah.
Would the margins be more or less similar across the different oils, or would it be differentiated? And if we differentiated, then could you give us some color on that?
The margins again depend on from time to time, So like we are doing mustard now. So mustard as of now is giving us very good margins. So at times sometimes in the year the margins in palms are very good. Sometimes it is soya, it is very good. So we have to have all the oils in our basket to maintain that profitability,
Right. But a major portion of your income would still be coming from soya meal, soya.
Yeah. Majorly soya, and slowly we have put up a facility for mustard also. So gradually we'll increase on mustard also because India crop is going on mustard also. So but major focus would be on soya.
Right. So next question is that, your capacity utilization was around 49% or so, if I'm not mistaken.
Yeah.
Oh, no, actually, sorry. That's, I think there are different capacity utilizations for different processes. But what would you say is your capacity utilization now, maybe on an overall company basis?
See, capacity utilization should grow again depending on the crop year, how it is. So, but what we see from the past, there is a growth, and that growth will be maintained, So it will be further growing.
And next year, we are expecting a better crop. So we expect that the capacity utilization will increase in the coming year. Last year, because there was a lot of volatility, but next year we see a bigger crop. So we see a major impact that the capacity utilization will further grow in the coming year.
So actually, I'm trying to understand that in order to grow from here on, would you require to do more investment, or would you have already got sufficient capacity which you can utilize in the coming 1 or 2 years without any investment?
So what we are doing is, see, we have sufficient capacity for the soybean processing, which is the basic thing. But what we are doing is to improve the profitability and the overall, performance of the company. We are adding new things. Like as we mentioned, we added a mustard line. So if you see, last year the mustard crop was around 88 lakh tons, and this year it is around 110 to 115 lakh tons. So mustard is growing, and the focus of government is also there on mustard. So we got a mustard line so that during the off season we can process mustard. So it will give us profits, as well as the capacity utilization will also increase. Other than this, we are increasing our presence in the packed oil. Our share, as we mentioned, right now is around 6% in the packed oil, which we want to increase to around 15%. Then we have also, and we are putting up a packing and storing facility in Raipur, so that our presence of edible oil can be there in the major market of Raipur and some parts of Orissa. Apart from this, to extend our agri-related activity, we have invested in ethanol, because ethanol looks very good and there is a very good profitability in the ethanol. So this also will reflect in our balance sheet in the coming years, And the last thing is, we have also started the production of value-added products, which I mentioned in my opening speech. We have started making grapes, flours, and nuggets. So this will also stabilize, and this will add up to our both capacity utilization as well as profit margins.
Sir, my next question is that how much was the volume growth in this year? Like, the prices have also moved up substantially. So how much of your revenue growth would you attribute to volume growth for FY22?
Right now, I don't have the exact numbers, but you can just shoot a mail to us and we'll revert on that. But on the basis, on the turnover-wise, I have already mentioned what was the growth.
Of course, yes. Sir, the next question is that who would you say are your listed peer companies? Like, if I had to understand, like your business model, would there be any, maybe not a direct listed peer, but some competitors in some of the areas that you are operating in?
It is Kriti Soya, which is there, and Ajanta Soya is there. And then you have Adani, Gokul is there, Gokul Agri is there. Then on a similar line, on a bigger scale, is Adani and Ruchi.
Right. And sir, you are supplying to Adani and Ruchi also, right? So what would that be?
We do.
So in what capacity would you be supplying to them? Like, you will supply to them and they will rebrand it, is it?
No, I couldn't get you. Can you come again?
My question is that, so when you supply to Adani and Ruchi, how do they sell it forward? Like, they will repackage it and sell the same product, or?
Yes, they at times process also. At times they pack and sell also. So they have their few registered vendors where they do the audit and their team comes and they approve the facility and then they start buying it. So they have a yearly audit of 6 monthly audit system. So they buy both. They buy finished also, they buy crude also. And accordingly they use it.
Sir, so your largest customers would be what percentage of your revenue? Like would Adani, HE or something?
There's no certain fixed system in this. This guy is largest because time to time it changes, depending on the market. Suppose it is the biggest customer, when it is domestic, the biggest customer changes. So there is nothing fixed. This guy is only the biggest customer.
But in oil, you can. So Adani and Ruchi are our regular buyers.
They are regular.
And their share would be, say, around 15%.
15% each or both together?
No, total.
Okay. Sure. So, sir, what about going ahead next 3-4 years? I understand it's hard to give a revenue growth guidance, but what kind of volume growth do you see going ahead? Maybe over the next 2-3 years. I understand 1 year may be affected by climate, but if you have to say over the next 3 years, what volume growth do you aspire to have?
So on the volume, basically, if you see down the line, the revenues from ethanol will also start coming in. Then we are putting up a edible oil refinery at the port. Once that starts, the turnover will have a major impact. It can grow up to, 70% from the existing turnover. And then, with all our, modification and the new things that we are starting, that will also add up both in terms of our utilization of capacity as well as our profitability. So next 2-3 years, we see a very positive impact both on volume and the margins.
Sure. So to sum it up, if I can just say that you expect a really good growth, maybe 60-70% growth in the next 2-3 years.
Yeah.
Sir, I'll just complete. Sorry, I'm not able to hear clearly, so I'll just complete.
No. First you finish, then I'll reply. Yeah.
Sure. Thank you, sir. So, sir, what I'm saying, just to understand or summarize what I understood from you, so around maybe 60-70% growth can be there once your new capacities and all are in place over the next maybe 2, 3, 4 years possibly.
Correct.
And you're adding value-added products, margins will also be improving. Extent to what the margins will improve, you are not comfortable to share right now. But in short, the company is poised for a good growth. And
definitely,
you do not see any potential risks to this. This is the first question.
There is no, major risk as such. There are some minor risks, but there is no major risk as of now. The only risk that we always foresee is the monsoon. That's the main.
And the volatility in oil price also would be another one, right?
Volatility is how you play the volatility, that is important. So we have always, taken advantage of the volatility in the past year. Right. And we have a proper risk management system, at place, so which also helps us to tackle the volatility.
So you would have a hedging policy or something?
Yeah, we have a risk committee which has a policy and which decides the exposure limits and everything.
Right. And then you would have inventory of maybe on average how long?
For what product? Because everything is for everything the inventory level.
Maybe what? Soya oil and soya meal, if you can mention.
Yeah, so during the season time, the inventory of soya beans is more. It can be at least 2 to 3 months. But in the off season, it is around 1 month or so. And finished inventories are always low. Our inventory level of soybean meal is around maximum 15 days, and oil also within 15 days. So we have a lower finished product inventory.
Right. So the next question is, sir, that how would you say that, like two options, like one is that would you say that, you are doing something differentiated, so which is hard for a competitor to do, or number two is that there are quite a few competitors in the industry, but there is enough demand and you don't foresee any problem with the demand. What kind of bucket would you fall into, sir?
Both the things, in fact, because this is a food-related industry, so demand is never a problem. There is always a demand at a price. So demand is not a problem. But what we are doing differently from our customers is, from our competitors is, we are expanding our base. We are just not dependent on one thing. We are dependent on the processing. We are depending on the refining. We do a bit of trading. Then now we have entered into ethanol. Then we are putting up the edible oil, port-based edible oil refining. So our base will become a wider base. So that is the major differentiation between us and the other competitors.
Right. And sir, last question from my side is that what do you see from the ROC perspective? Like you have a healthy ROC, but there's also two subparts are there that would you look for some specific ROC when you are looking at new projects? And number two is how do you see the ROC moving going ahead over the next 2-3 years possibly?
See, ROC growth will be definitely there. That is why we are putting up the new projects to have a better return. So next 2-3 years coming, what we see the market and what we see, so we expect a decent growth on this also.
Right. So, sir, I think I've taken up a lot of your time. I will reach out to you for the queries over email. Thank you very much for patiently answering the questions.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on their touchtone telephone. We have the next question from the line of Karthik Sharma from NVS Brokerage. Please go ahead. Mr. Karthik Sharma, so the operator, can you hear us?
Hello.
Yes.
Yeah, my questions have been answered. Thank you.
Thank you.
Yeah.
We have the next question from the line of Venkatesh from Intro Hive. Please go ahead.
All of my questions have been answered, and I have a one final question. Is like the custom duty has been removed for soybean and sunflower edible oils, and what would be the impact on the KN?
Yeah, I'll answer this. Actually, due to inflation, already the government has reduced the duty to 0. Only there was some cess which was around 5.some%. Now, yesterday the government has come up with a notification that under TRQ scheme for 2 million tons per year, they will allow imports at 0 duty and 0 cess. So this is a positive impact on us, and the details of the notification have also come, and based on the capacity, they will be allocating the amount of imports that we can do. So definitely this will have a positive impact on us.
And that's awesome, sir. And another question is like, and what would be the market share that we have on the soybean oil as well as edible oil?
Soybean in the total monthly is about 35,000. We have a share of about 6% packed oil.
Okay. And it's awesome, sir. Awesome for the nice IPO and the wonderful half-yearly results.
No, I couldn't get you. Can you come again, please?
Yeah, I just wish you for the awesome IPO listing and the
Thank you.
and the awesome results. Thank you.
Thank you. We have the next question from the line of Vibhor Jain, an individual investor. Please go ahead.
Hi. Congratulations, first of all, for the good set of numbers. My question to the management is, how much % of revenue comes from the top 5 customers and top 10 customers?
See, again, it depends on year to year. It is scattered, so the whatever top 5 customers are this year, maybe they are different set of customers next year, because the trade is very dynamic. So you have different kind of, suppose some year there is good export, so the major sale comes from export buyer. When it is domestic, it comes from domestic. So it keeps changing, depending on the situation, how it is.
Okay. Okay, sir. Sir, the second question is, in future, do the company will have a dividend policy for the investors?
Nothing decided so far.
But of course, once our capex is over, then we will have a dividend policy also in place.
Okay, sir. Thank you.
Yeah.
Thank you. Due to time constraint, that was the last question. I now hand it over to Ms. Astha Jain for closing comments, please.
Thank you, sir. On behalf of Hem Securities Limited, I thank KN Agri Resources Limited team for responding all the queries in the detailed way. I would also like to thank all the participants for joining this call. I would now like to hand over the call to the moderator.
Thank you. Ladies and gentlemen, on behalf of HEM Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.